Let's connect then with Sudip Bandyopadhyay as well, who's joining in right now on the show. Sudip, thanks so much for taking time out. Let's understand from you what the outlook is when it comes to the entire real estate space. Some a little bit puzzled as well about that momentous rally that we witnessed last week. What's the outlook given that it seems like consolidation has kicked in now?
Well, I think some amount of consolidation, one was bound to happen after the rally we did see, and that's pretty much what is taking place now. If you are looking at a medium to long term, I think real estate, particularly companies with a decent balance sheet, are in a very, very good wicket. Some of them are definitely worth looking at from a long term point of view, even at current valuation. Let's say Godrej Properties, there has been corrections in between here and there. Even DLF or let's say Prestige Shobha can definitely be looked at current levels also.
Meantime, let's take stock of some of the result reaction that we are witnessing. Pull up the Vinity Organic chart because that's dipping as we speak. The revenue has come in at around 500 crores versus 486 crore last year. And the profitability is also just 115 crore versus 100 crore. So people who are expecting a lot perhaps the expectations have been a bit tempered and the result is lower than what Street was expecting. Separately, let's also pull up the counters of KEC and KEI. Not sure what's happening in both of those counters, but KEC is up with good volumes at around 12% and KEI too is trending higher. Naresh, your take on KEC, KEI, would you be a buyer in either? Naresh, you have to unmute yourself.
So KEC looks a lot more interesting. KEI has done very well over the years and over the short term as well. KEC is interesting for the fact that it has recovered the whole fall over the last 1 week. The stock had given a breakout of 520, did not sustain for more than a day, fell down back to 480 levels and today it has recovered. The longer term structure is very interesting because 550 has been a problem zone for the last 2 years. Sustaining above that, we get into a new all-time high move. So it's a buy at current levels, could look at a target price of 700 in the medium term. Technically, in the chart formation is interesting with a longer term view. Volatility has been much more higher for the stock than it has generally been. So today's move negates the whole downtick which happened over the last 1 week. So interesting with the medium term outlook.
So the post SBI's numbers, majority of the brokerages are giving the stock a thumbs up, raising the target price. What's been your takeaway?
Absolutely. I think the numbers were pretty much in line with what was being expected. And all the talk around expected credit loss being introduced by RBI in the near future also should not worry SBI because they have more than adequate provision coverage, and even if that expected credit loss guideline does come, I don't think it will rattle SBI in any manner. Some of the other PSU banks may have some challenges, but as far as SBI is concerned, I think the road is very, very clear. They are performing. The asset quality has improved. The loan growth is there. And I think, even at current level, it does look good from a long-term point of view. And if you compare it with the private sector peers, I think still it's available at a very, very reasonable valuation. So there is absolutely no problem in buying State Bank. Also, one other point I must mention is that subsidiaries are performing very well as well. And they have a potential to go up significantly from current levels. So whether it's an SBI Cards or an SBI Life Insurance, or even the other unlisted subsidiaries of SBI, they give to value unlocking opportunity, further value unlocking opportunity in the near future, B, a significant bump up in the consolidated results.
Okay, so that's a take on SBI. But pull up the market itself, it's pulling on more gains. 18,200 has been scaled, and look at the rally in the last few minutes itself. Pull up the Bank Nifty as well and see if there is a bit of momentum there, because it's definitely Adani group of stocks which are quite excited. So pull up an Adani Wilmar, Adani Power, Transmission, Green, Gas. Look at the one-way moves on those counter. They were languishing with a cut of around 4 to 5%. On an intraday basis, there has been a recovery anywhere between 5 to 10%. We've taken the fundamental opinion on that. Let's take the technical opinion as well. Kunal, any of the names from the Adani group of stocks that look interesting on the charts?
I think Adani Ports is one which is more formidable. I think stock was again into a mild correction. I would not say very sharp correction the last 4-5 days. It came back towards, I think, 669, 668 on the spot levels, and from there it's made a good comeback for itself. from the other group of stocks, I think Ambuja Cement is something which also looks attractive. It's been holding on to that 400 mark for the last couple of weeks. There has been good activity in the options data for the May series for Ambuja Cement. So my expectation is that hopefully in the next week, which is the expiry week, we can expect some positive move for Ambuja Cements as well.
Since you mentioned Siemens, pull up the intraday chart of Ramco Siemens, a bit of a result reaction, but nonetheless 8% higher. And then on the other hand, you have Star Cement, which is slipping. Kunal, any view on either of the names, Ramco or Star?
So Ramco could be interesting. Again, I think it's a second or the third consecutive day of up move for Ramco Cement. Opened with a gap today, maintained the gap for the stock, and in fact, it built on post the opening gap for itself. So that's again a good sign for Ramco Cement. But the only question is that in a market which is a bit more slow, staggered, whether one wants to chase these high beta stocks at a 7-8% kind of an upward move. That's the only concern for a stock like Ramco. But other than that, the charts are quite interesting as well as confirming a breakout for itself.
Sudip, we're also expecting Zomato's numbers to come out today. A loss is expected of about 356 crore rupees. And of course, we'll be looking at the internals quite closely. What do you think the street wants to hear? Do you think that if it is a good number, that there's a potential for a re-rating?
Well, I think, as you say, if there are good set of numbers, if they have, reduced the losses significantly, there may be some excitement in the market. But I will continue to advise caution from an investor point of view. I think we haven't seen it getting played out fully. The story is yet to unfold fully. So it's better to wait and watch. They are still loss-making. Unit economics are still probably not very favorable. Under the circumstances, I think it's better to wait and watch. This temporary exuberance post results may be a good point of entry and exit for traders, but not for investors.
Okay, so that's the take coming in as far as Zomato is concerned. But is it a good entry point for IT stocks, Sudip?
Some of the IT stocks, definitely yes. And I believe that while a lot of experts are writing off, at least for the time being, IT sector as a whole, and some of them are exiting and recommending no buy. But I think Indian IT is a structural play, and if you look at what is happening in global markets, whether it's US or Europe, most of the cases projects are being postponed. It's not being cancelled because I think they do understand the importance of technology and importance of outsourcing the job to a market like India or companies of Indian origin because of the sheer cost advantage. And if there is a financial challenge, I think cost reduction becomes a priority, in which case Indian companies do get an upper hand as far as service delivery is concerned. So I won't be too perturbed with 1 or 2 quarters subdued results, a few order cancellations or few postponements here and there. I think we should look at the long term and seek opportunities of buying for long term. So whether it's an Infosys or TCS for a long-term investor with 1 year plus time horizon, I think it's a great buy. Some of the mid-cap IT and some of the niche IT companies also do look good. Let's say KPIT Cummins or let's say Railtail and whole lot of other companies which are servicing multiple niches which are doing well or are expected to do well will continue to perform. Leave aside specific quarter performance or next quarter expectations. Look at 1 year plus time horizon. I think one will find enough opportunities.
Okay, one will find enough opportunities when it comes to the IT sector as well, but taking stock of some of the other big movers, because remember for the week we have managed to move into the green, and that's largely been led by the move that we are seeing today, because at the start of the day we were trending with a cut of around 0.5%. Now we have managed to, no, actually we're still in the red, so we have snapped the 3-week gaining streak and currently trading just around that 0.5% lower for the week as well. Even the mid-cap index, that's managed to advance for 8th straight week, and the small cap index too has managed to show a bit of an outperformance, and outperformance was seen from the banking names as well. But just coming back to the point that we are making on Zomato, of course the numbers will be out later today, but let's go across to my colleague Vinny to understand what the key internals are. Yes, the expectation is that loss will be narrowed, but what are the other internals to watch out for? Vinny, tell us more. Okay, we'll get Winnie in just a bit to help us decode all of that. But in the meantime, your take, Kunal, as far as the chart check is concerned on Zomato?
Well, I think it looks very interesting because I think at least it looks like on the chart that the worst could be behind for Zomato on the price correction. I think in the month of June, July 2022, the stock fell to as much as 40-41 levels. The recent low for the stock was around 50-52 mark, and now the stock has come back to at 64. It's spending some time at the 60 plus mark. Over the last couple of weeks, we've seen the stock consolidating. So when a stock upgrades its support or moves up higher from its previous major support, on a regular basis, that's generally a sign that the stock is getting up for an uptrend. The demand is getting more stronger for the stock, and when it tries to take some time to consolidate at the higher end of the resistance and getting ready for a breakout, we expect the stock to get into a stronger breakout zone. So I think Zomato is a stock which actually fits into that category, and most of these other the new age kind of stocks, they've actually shown signs of very good recovery as well as strong breakouts, whether it's the likes of Paytm, Policybazaar, etc., which means that the markets are tilting back towards buying into these kind of spaces. So I think in that regards, there could be a higher probability that even Zomato can break out on the upside.
Just pull up the 1 week charts of some of these stocks because they've had a pretty decent run up for the week gone by. Hero MotoCorp has gained close to 4%. That's your top Nifty mover for the week, that is. You've got IndusInd Bank as well. Our technical guests have been pretty optimistic on the stock. Tech Mahindra getting a 2.5% notch up for the week. But on the flip side, the gashes have been far deeper. For Divi's Labs, for instance, that stock has lost out about 6%, 6.5% almost for the week gone by. Apollo Hospitals as well, down and out in the week, losing 3%, and a 3% cut on Power Grid as well. Naresh, let's get in your view then. IndusInd Bank continue to have a thumbs up on this stock, and what's the outlook on the flip side on Divi's?
So IndusInd Bank looks very, very promising if you look at the structure of the chart on the longer term basis. Pre-COVID, the stock used to be 1250. It was at 1250 back in 2021, back in 2022, and now we are back to the same levels. But in the short term, what has happened is over the last 1 week to 2 weeks, it has outperformed the Nifty and the Bank Nifty. And this is odd for the stock because it was an underperformer for a really long period of time. This indicates this could be start of a new trend and a leadership move. So I am extremely bullish looking at a target price of 1600 in the medium term. And from here on, also it's an accumulate. I would expect a move slowly and steadily, and say any dips from here is a buying opportunity. DBs on the other hand has not been able to cross back that 3400, 3450 resistance, which is where it cracked from on the last quarterly results. At least for the last 3 quarters, it was getting knocked off on every result. This time, it has not seen a similar knockoff. So for the short term, is negative, could test 3000, but not looking at it as a major move. It's a short for a couple of days, and it's getting close to the target price of 2900, 3000.
So that's a take coming in on IndusInd Bank as well as Divi's Lab. But what are the BTSC ideas coming in, Naresh?
So looking at Maruti, that's the first one. Infosys is the first one. Second is Maruti. First is a buy on Infosys with a stop loss at 1260 and a target price of 1300, a bounce back trade. Second is Maruti, which is bouncing back from the retracements, a stop loss at 9040 and a target price of 9200.
Now, what about you? What are the BTSC or STBT trades that you have for our viewers?
So, 2 buy calls. First one is about Samvardhana Motherson, a stock which I've been bullish on earlier. It's crossed at 80 levels for the first time, I think, in the last many months. So, it looks attractive for a target of 86 on the upside. Stop loss could be tailed to 78 for traders who've been long on the stock earlier. And ICICI Bank could be a fresh candidate of a breakout. I think it's a classical breakout coming back into the stock price, trading above 945 mark and on the futures level at the 955 zone. So I think a breakout above those levels could lead to a very strong up move for ICICI Bank, expecting the stock to hit levels of 980, 1000 over the next 1 to 2 weeks. Stop loss for this trade 920.
Just pull up Siemens India. There was a news short while ago that the board has approved the sale. This is of their low voltage motor operations. They plan to sell those operations to Siemens large drivers for a sum of 2,200 crore rupees. And now you're seeing a very adverse reaction coming in on the stock price. Sudip, just wanted to get in a quick take as to what the outlook is on Siemens.
Well, as far as Siemens is concerned, we have been positive, and I think the way the tailwinds are, they should continue to do very well. We have seen both Siemens and ABB had not been performing for a very, very long time, but right now, over the last few months, we have seen them perform and outperform. And I think that trend will continue for a significant period of time. Their order book is getting more and more robust. And considering the kind of capex the government is talking about in the budget, I think this augurs well for a company like Siemens. This specific transaction, I really won't be able to comment. It looks like an internal restructuring. I don't know the impact of this at this stage before studying in detail. But fundamentally, Siemens does look very good.
It's been a problem with Siemens, right? Earlier as well, they sold their healthcare business, and what happens for their investors is they get a special dividend, but they miss out on that entire growth that business is projecting. Has been a worry point for ABB as well as Siemens that they keep selling out and shelving out the units to the parent company. And that's exactly what seems to be panning out. In the interim, in the last 3-4 years, we hadn't heard about much of the rejig happening, but again, the news coming in. And that's the reason that continues to be an overhang on that counter as well. But just last 3 minutes left to the trading session, so let's try and understand what could be the strategy for the week going forward. Kunal, it's going to be an expiry week, a busy one, because we'll get a lot more earnings, of course, to deal with. What's your take? Are we likely to go back to those 18,400 and higher levels?
Yeah, it seems like, and I think it could be a good texture because what the global markets have started to offer right now, Nasdaq hitting multi-month high, Japanese index making a fresh, I think a 33-year high.
Expiry also next week.
Yeah, so I think, so the approach in which the markets would go into the expiry would be a lot more calmer than what we've seen this week, where there has been a lot of chop and churn for the markets because the global factors are not as negative as what probably one would have anticipated maybe a couple of days back on the back of some news flows. So I think that could probably result into higher rollovers for the the stocks as well as on the indices. So I think net the approach for the markets could be a lot more better, and I would expect that many of the stocks which have been beaten down the last 1 week, the PSU banking names, auto stocks, private sector banking stocks, many of the sectors could make a very strong and a ferocious comeback.
All right, there you have it. That's the view coming in on the index overall. Meantime, wanted to get in a take from you as well, Naresh, as to what you're penciling in for the Nifty Bank Index next week.
So Nifty Bank Index has done relatively better compared to the Nifty, and we are back to that touching distance of 44,000, which was the previous high. The only reason not as gung-ho because HDFC Bank is still away from a breakout. But overall, the banks look interesting. New leadership like ICICI remains the old leader. Axis and IndusInd could be the new ones. So these are the names would be focused on rather than the Bank Nifty. So like the three banks, once any of the larger weights move out, the Bank Nifty could also break out much more better.
All right. Let's wind it down then and wrap up the markets for you. For today's trading session, not bad because we have managed to actually breach that level of 18,200 by the time we closed. So hopefully should scale up above that level. For the mid and the small cap indices, it's really been touch and go between the red and the green. IT has managed to see a bounce back, real estate as well, not too bad, and the Nifty Bank Index up 0.5%. Pharma, though, continues to sit it out, and PSEs are in the red. For the week gone by, the index has snapped its 3-week gaining streak, and we've hit a 2-week low. Meantime, taking you through the frontline movers, Adani Ports, Adani Enterprises, it's clearly been positive news coming in for most of these companies with what the Supreme Court had to reveal. Tata Motors in the green, HCL Technologies, Axis Bank, ICICI Bank, IndusInd Bank, no wonder then that the Nifty Bank has recovered. HUL, Reliance Industries, those are some of the other heavyweights that have contributed. Divi's Labs, Salts and Trade, Tata Consumer, Britannia, UPL along with Asian Paints are some of the other key drags. There's been a whole host of newsmakers then, just going to run you through a few of them. You had Motherson Sumi Wiring, which came out with its quarterly numbers. Siemens India, as we told you, the board approving the sale of their low voltage motor operations, clearly being an overhang on the stock. West Coast Papers, another stupendous set of numbers. Taj GVK came out with its earnings. Dilip Bilcon was another set of numbers. DB Corp, as well as something like an Alcom Laboratories, came out with a revenue degrowth of about 34%. So that too was a stock that was in the spotlight. Meantime, some of the other newsmakers, a quick look at Gland Pharma. That stock too reacting to its numbers. You Grow, we spoke with the management, and you had Ashish Kacholia as well buying stake. The AMC stocks, SEBI releasing the new norms has had an impact on the likes of UTI, ABSL as well as HDFC AMC. Within the broader market, it's no great shakes for today's trading session, but yes, for the week gone by, the mid-cap index has advanced 8 straight weeks on the trot, and ditto when it comes to the small-cap index. KEI International stands out, Ramco Siemens, Adani group of stocks, Birla Soft continues its up move, something like a Tata Investment, Glenmark, Brigade Enterprises and Radico Khaitan. On the flip side, RITES loses out, Uno Minda in the red, Ujjivan, JK Tyres, Westlife Food along with something like a Vinity Organics have been key drags in trade. Breadth skewed in favor of the losing side, but yep, 18,200 is the print on the screen. Timed out on this edition of Closing Trades from the team that put the show together. Thanks so much for watching.